Hey cousins, it's your favorite insurance cousin Quan, and we gonna get into it real fast because I done did some little scribbles and I'm I'm trying to get it together because y'all have so many questions and I try to knock it out. I try to be in and out and just give y'all little tips of the day. And this one right here, a person wanted to know what happens when an agent misrepresents a policy as replacement cost value and it is actually actual cash value, or if the agent accidentally forgot to mention that a roof was excluded. Here's the thing. Let's talk about this. So, misrepresentation is real when it comes to insurance agents. That's part of their CE credits and things like that. Misrepresentation is when an insurance agent, it usually applies more often to life insurance policies than it does to property and casualty because it could be you could be getting something that you're not, but I guess both in the same way. But it's basically, as an insurance agent, if I'm telling you that you have something that you don't have. So that's where misrepresentation can comes in at. Now, when it comes to actual cash value and replacement cost, actual cash value is what the home is at the time of loss. And the replacement cost is what it would be to replace it. Well, we run into that as agents all the time because people will always say, especially when they're buying houses from these land banks and these foreclosures, these lists and things like that, they'll say, well, I only paid $75,000 for the house. Well, if you only paid $75,000, that's just what it was worth. That's not what it's going to cost to rebuild it if it catch on fire or if it's a loss, because I'm sure if you go to a contractor, by the time the contractor puts in parts and labor, it's going to be more than $75,000. I told you guys I had that happen before. So if that's the case, you have to prove that the agent actually told you that you had something that you didn't have. And then errors and omissions is what agents have. And that's if they forget to do something. It's something that they made a mistake. It's actually the agent's fault. For instance, you call and you say, I need to make a payment. And I take down the information and I say, okay, I'll take the payment and I'll email you the receipt shortly because I'm in the process of doing something. Then I forget to take your payment and that could have been the last day and your policy cancels. Now you called and I forgot to do what I was supposed to do. Or you say, I have a new vehicle. I've been carrying just liability on this vehicle and I need comprehensive and collision because I have a loan on it now. Can you add comp and collision? And I tell you, yes, I'll add it on. Then you get into a car accident and you find out that comp and collision wasn't added. That's an agent's errors and omissions. That's something that I did wrong. But if I'm liable and I intentionally did something, that falls up under liability, something totally different. Like I intentionally not added comp and collision on your vehicle just to get you this policy or something. It have to be proven that that was my intentions to do it, was to make it difficult for you. So with errors and omissions, you have to prove that they're at error. Now, when it comes to your policy, ultimately, you're responsible to know what it covers and what it does not cover. Most people will say, well, how am I supposed to know? When people get insurance policies, they just assume that the agent did everything that they were supposed to do. And I'm going to always say that you have good agents and you have bad agents, and you have a whole bunch of new agents that's coming in. So I can't even account for them because I don't even know what's going on with the new ones. But with that being said, you have to be able to ask those questions. Most people ask all of the questions when it comes to getting a job, when it comes to money or things, finances, but they fail to ask, what does their insurance policy cover? Those are issues. What do this policy cover? If the roof is excluded, which most companies, if you got a bad roof, they ain't even trying to deal with you from the beginning. You usually have to go to somewhere like Michigan Basic or a high risk or somewhere, and they will exclude the roof. But you would know this because they will send you a letter and tell you that your roof is excluded. You knew going into the policy that your roof was bad, but you chose to wait. If you knew that you ain't replaced that roof in years, or you don't know when it was replaced, then it's time to find it because it's possible. because you will have a claim and they'll tell you, no, this isn't a weather issue. You were going to have this issue regardless because you needed a new roof. So those are the things you have to kind of like prove that it was done. You have to ask those questions. Policy reviews are huge. I tell people they need to be done at least once a year. Or knew what happened throughout the year. The insurance agent doesn't know. So therefore, you don't want to wait till a claim happens to find out. So yes, when it comes to misrepresentations with an agent, you gotta prove that they missed. Because most people are just like, I just want it. Most people want insurance based on costs. And I can't emphasize, I could talk to you till you blue in the face. That's the worst thing to cheat with is insurance. It's the worst thing. It's no different than saying, most people would say, well, if I have a certain type of vehicle, or if I have a Ford, then I expect certain treatment versus if I had a Lincoln. So most people say it's more quality if I had cloth seats or if I had leather seats. So when it comes to insurance, you can't say I want the basic coverage, but then when it's a claim, now I want platinum and premium. It doesn't work like that. Insurance companies are becoming more aware because of technology. I tell people that all the time because of technology. Technology is helping them more. AI, drones, things like that. Every time you go get an oil change, and the oil change, they put in how many miles you got. Before, most people just like, well, no, just don't take it to the dealership. They won't even know. Well, the oil changes, the Jiffy Lubes and all of that, unless you're going to take it to your cousin and them, that's a little different. They might not do it. When you take it to the Jiffy Lube up the street, then yes, they're going to they have logs that they put it in and they know, and the system comes up. That's how Carfax and all those things are able to pull up things. So you kind of like don't want to cut corners because you might need it. For instance, I had a guy that said he got into a car accident and the speed odometer, they couldn't figure it out. It wasn't coming up. The car was dead or whatever happened. So they said, and he kept saying, I had this many miles. And they're like, no, based on this vehicle, you should have this many miles. And he's like, no, I did not. I know how many miles I had. I just had an oil change. And the first thing they said, well, where did you get your oil change at? We'll be able to pull the miles on there. And so that's what actually helped him in getting the correct payout for his vehicle. So that was another one. That was that right there. I wanted to talk about E&O insurance, misrepresentation. Another thing I wanted to talk about was gap insurance. Keep in mind, more and more carriers, I'm starting to see so many total loss vehicles more than ever. And that's because more vehicles it costs more to get them fixed. Everything is inflated. Y'all feel it, I feel it. I go to the same stores that y'all go to, so it's no difference. But with inflation being so high, so say you go buy a 2010 Chevy and you pay $10,000 for this vehicle, but your credit is not so good and you finance it through credit acceptance or whatever, and they give you a high as all get out interest rate. Now the vehicle was $10,000. By the time you financed it, and they say you financed it for 6 years or 8 years or whatever, and they say at the end, you'll be able to finance this vehicle for $17,000. Well, if you get into a car accident, 90% of the time, if it was already on the borderline, then they probably didn't give you gap insurance. So therefore, when the vehicle is a total loss because you get into a car accident, they're only going to pay what the vehicle is worth, not what you financed it for what it's worth. So therefore, if you know sitting at the finance table that they didn't give you gap coverage or loan lease coverage, they call it so many different things now depending on the financing. If they didn't give you that, then when you get your insurance, if that carrier offers it and you know dang on well that your credit a little shaky and you got this car based on putting some what is it, a wing and a prayer. Y'all put the oil on the tires. Y'all know y'all just about got this car because they got buy here, pay here, finance here. We finance everybody. Everybody drive. You get a car. You get a car. You know your situation. With that being said, you need to add that on there. Now, insurance is already high. I understand that. I absolutely do. But what you don't want to happen is somebody hits you and now you upside down on a car that you don't even have, because that loan isn't going to get closed out. The insurance company is going to pay what the vehicle is worth. So now you might have had it for 6 months. You might have had it for a year. So you financed it for you had it, you bought it for 10, you financed it for 17 because the high interest rate. And now when they want to pay it out, they only want to give you 7 or 8. So now you in the red, $10,000. That loan is not going to close. And if you do get another car, you got to roll 10 grand into the other car. So loan, lease coverage, gap coverage is huge. And if you know your interest rate is high, you might want to consider getting it. Because if they didn't give that to you and they didn't talk to you about that when you purchased the vehicle, then that might be a question. That might be a conversation that you want to have with your insurance agent to see if you can get that. Because what's going to happen is that if someone hits you, I mean, you could take a chance, but you ain't doing nothing but putting your seat. If you already was lucky to get the car, you damn sure gonna be really praying when it's time to get another one. So those are things that you might want to like take in consideration when it's time to get a when you're shopping for cars and things of that nature with the loan, lease coverage. That's very huge. Other than that, that's pretty much it. I didn't have any more questions to answer. Those were the two major questions that I wanted to jump in. So once again, if you guys have any more questions, feel free to hit your cousin up. Once again, y'all know my favorite saying is, my tagline is, never take price over coverage because it'll fail you every time. And y'all, Cousin Quan, I'll see y'all next time. Y'all have a good Friday and be safe out there, cousins. Talk to y'all later. Bye-bye.